Alright, yo. I just recorded a whole video without sound, so I'm just gonna do it again. It was a video of... oh, where is it? 34 minutes. Alright, so market just opened right now, but it's Monday, it's a bank holiday, so I'm gonna go through everything. So let's do a recap of previous week and analysis of upcoming week. So previous week, let's go to Notion. So previous week, took one trade actually, or took a loss. So last week was a loss week. Took a trade on Monday, medium impact, was a break even. Tuesday we have medium impact news as well, was also break even. Then on Wednesday and Thursday I actually took no trades, didn't see setup, and wasn't able to trade on Thursday, so no trades there. And on Friday I took a trade. I took 3 trades actually, and it was a loss. So let's actually go through that. So I actually took 3 trades here. So one, I don't have it on here, but one trade. Why I took this one, we had an SMT, which is a small scalp actually, but I wanted to see lower prices, so I actually bearish for a day. So we got a beautiful reaction off of consequent encroachment. We went lower. I actually want to see way lower prices, just what I said, and we had a inversion on this, so I took it on ES because ES showed that it was weaker. So I got in at an inversion on the 2-minute, and that was right here, was somewhere on this candle here. I think it wasn't this candle, yes. So entered in short there, stop was above that, and then first break even / partial was going to be equilibrium there, and we got 2 ticks off of that, and then market went higher. So that was unfortunately a loss, but what I learned from this is just probably too zoomed in. Like, we have a really small SMT, even though I was bearish and news released after 10. I was looking for bearish prices. It was just fine to take a loss there because I want to see price at least go to equilibrium before going higher, but I didn't do that, so it was a fine okay loss to take. Then I took a break even, wasn't on here, and then the last trade I took was close to 15, so I don't trade after 3, but we do got a beautiful setup after this. So we got accumulation, a lot of accumulation there. Then we had an SMT, and we had big displacement from there, and that just showed that market was going lower, and I was looking for bearish prices all day actually. Then we got that 3-minute SIBI here, also 3-minute SIBI on ES, and then on NQ you can see that we are way weaker than on ES. ES stepped in that, NQ didn't. We even had an SMT there, I think. And then from there I want to see this get in first, because this was the reaction on ES here. This was the reaction off of that SIBI. Then we went lower, and I want to see this get in first, and then from there I wanted to instantly go short, market execution, stop above that high, then go lower. As you can see, we didn't inverse this here. I thought we inversed this, but we didn't. Have my stop above this order block. It wasn't an order block because we didn't close below. There wasn't a change in state of delivery. So from there we got stopped out with the exact price point as where my stop was. That's where market went to, and then from there it went straight to my TP. So from here, what I learned, never enter early on a inversion, but still my bias was correct, and just an unfortunate trade, really unfortunate, but it happens. But yeah, still my bias was correct in there. But yeah, that's the only loss that I took there. This was a 0.25% trade. This was a 0.40% trade, so 0.65% loss, but was even half risk here, and this was full size, but it's just the max 3 contracts that you can do with the My Founder Futures account. So yeah, took a loss previous week, slowly fine, and now for this week, let's do the analysis there. So I actually did my entire analysis on DXY and NQ. I'm still gonna do it again, but I already know what I want to see because I had that whole recording. But Monday, it's a bank holiday. We have a bank holiday US as well, as GBP. So USD, it's a Memorial Day. It is Memorial Day, and UK banks will be closed in observance of the spring bank holiday. So it's just a bank holiday there as well. Then USD bank holiday, and it's a Monday, so definitely no trading for me. So Monday, no trading. Tuesday, we have consumer confidence at 10 a.m. So Tuesday, tomorrow, is going to be a trading day for me. We also have medium impact folders, medium impact news folder. Wednesday, we have no high impact news folder, but we do have medium impact news folder. So Wednesday is going to be more like a accumulation day than distribution day. So it's going to be more. I am going to be on the charts. I'm probably going to be trading, but it's just going to be a more careful day. Like it's going to really look for good setups, and if there isn't a setup, then there's no trade, of course. So Wednesday you can decide for your own, but I am on the charts on Wednesday. Thursday, we have 8:30 prelim GDP, we have unemployment claims, and we have pending home sales at 10. So Thursday is going to be a beautiful trading day. So a lot of distribution is going to be there. And then on Friday, we have probably even more distribution or just continuation slash expansion. That's going to be 8:30 price index, core price index. So just expansion on Friday. So Thursday and Friday are going to be the best days to trade. But I am going to be taking trades on Tuesday and Wednesday. And this is going to be more of the, this is going to be an accumulation. This is going to be a bit of accumulation as well, slash manipulation slash distribution, and then distribution. So that's what I want to see with the economic calendar. Then let's first do the analysis on DXY, which I already did. So DXY is actually looking beautiful here, actually going lower there. So actually what I want to see on DXY, we went lower. I actually was looking for higher prices, because we inverse this here, which is on the daily. This is a singular inversion here. So we got a closure above there with this candle, and then we went lower. I want to see higher prices there on Friday. But as you can see, we just traded way lower, and we even tapped this trendline liquidity here, which I have beautiful marked out. So we have all this trendline liquidity here. We just took out a low for trendline liquidity here. There. And I see that we're now trading even lower, even though it's a bank holiday. It doesn't really mean anything. But we're trading lower here, and this is actually external liquidity. So where we want to go back to, well, we have internal liquidity, and that's a singular SIBI on here. And then we also have this inversion, which I marked out, which is a singular inversion on the 4 hour. But it doesn't really matter, because I don't think the price will come back up that high before going lower. So could remove that. But what I want to see, we just took external. I want to see us go back to internal. So I think Monday is going to be closing around this SIBI here. So probably we are trading lower now. We could take out this low or just generate liquidity, and then from here go even higher. But what I want to see is, I want to see market from somewhere around there go back to this SIBI here. I want to see us accumulate inside this SIBI. I want to see us manipulate on Tuesday / Wednesday. So Tuesday could be the manipulation, but Wednesday is going to be taking Tuesday's high, or you could just be accumulating even more buy side liquidity and then go lower. So we have right here. So we have even more liquidity, and then from there go lower, and then we have liquidity above there. And then from there, just easy explained. I just explained the whole thing with a beautiful example. What I want to see is, I want to see accumulate. I want to see us from there go even lower. And then where lower to? Well, that's going to be lower to this sell side liquidity, which we are right now. But what I want to see simply is, I want to see us go back to these lows, which is this trend line liquidity, and we also have equilibrium there. And then from here, this is actually on the bear time frame, it's going to be the low risk buy, and then from there I want to see higher prices. And that would be on the bigger time frame, would be low risk buy, and then from here we would complete a market maker buy model. So if we zoom out here, maybe it doesn't make sense now, but what I want to see is, actually previous week I want to see us come back to equilibrium, take out this low, and then from there go higher. We got this beautiful reaction here. We inverse this here, but we went lower. We didn't get the full reaction of that inversion and then go higher. So we tapped the volume imbalance, went lower. So this shows that we want to go lower. But where lower to? Well, we already rebalanced back here. I don't want to see anything here. We tap constant encroachment there. So what I want to see is, I want to see us take out this trend line liquidity and then go higher. But why? Well, if we zoom out, then bigger time frame is rebalanced. We go zoom in. Now we want to go lower, but we also have this beautiful market maker buy model. So explain here, we have these equal highs, accumulation 1, accumulation 2 already to go even lower. We have the smart money reversal. So the smart money reversal already happened. So we're now at the buy side of the curve. If you make this here. So we're now at the buy side of the curve. Where we rebalance here, we take out the sell side liquidity here. Now we go higher, we even inverse this here. This is showing that it wants to go bullish. But this is showing that it wants to go bearish. So what is this going to be? It's going to be a deep retracement, which is going to be the low risk buy. And then from here, we take out these lows because that's all that trend line liquidity. And then from here, it's just really bad marked out here. Inverse this here. And then this is going to be the low risk buy. What is this also going to be? Why is this a protected low then? Well, if we zoom out here, then we have a candle closure there. We have a big wick here. This already reacted off that rejection block, so we don't look anything any lower than that. So we have a rejection block there. Beautiful rejection block there. Rejection blocks are also imbalances. Now we zoom in. Now we go even lower. What I want to see, I want to see us go back to internal. So it's probably going to be around that low. Maybe go even lower, but what I want to see is actually, I want to see us go back to the SIBI here. And from there, the SIBI reaction, I want to see us go lower. Take out these lows, take out all this trend line liquidity. Then react off equilibrium or this high. So this high of this rejection block. Or go to equilibrium of this rejection block. Or take out these lows here. So if we go to equilibrium, then we probably take out all these lows here as well. And then from here, I want to see this as a turtle soup because that's going to be the low risk buy. And then from there, I want to see the higher prices. And then how this is going to look, it's going to look like this. We are trading a lot lower here actually. Let's see if we get the reaction lower. Look at all this liquidity here. So we have all these equal highs here. So there's a lot of liquidity here that we would definitely want to go back to. But what I want to see is how I just marked out. We didn't have that, but what I just had in that previous video. Let's say it was Sunday. I didn't see this reaction. So we just took external. I want to see us go back to internal. So from here, I want to see us go back to internal. And then from here, we erect off this SIBI. And then what we do is on the lower time frame, we probably go lower. There. And then from here is where we go lower. We go to this rejection block, but what I prefer to see is I want to see us go even lower, back to equilibrium, go even lower. Take out all these lows because this all just equal lows, all just liquidity. We go even lower, take out all these lows. I want to see this act instantly as a turtle soup, so I want to see an instant reaction basically, not on the seconds chart or something, but on the hourly time frame. This is gonna be so from here on the hour time frame, I want to see us go even higher, and then you can see this is a market maker buy model in its own. So we have accumulation, original consolidation, accumulation 1, accumulation 2, smart money reversal, and then what was this also? This was also a low risk buy. And now from here we go even higher, and then even higher because on the bear time frame. Because on the bigger time frame we also have a market maker buy model. So we have a market maker buy model inside of a market maker buy model. So let's look at the daily. So we have original consolidation, accumulation 1, accumulation 2, smart money reversal, low risk buy, that turtle soup here. And then from there, market maker buy model in its own, continue because it's a market maker buy model inside of the market maker buy model, and then go even higher. So that's what I want to see on DXY. And then also the reason for it is because on the indices, so what I want to see for this week, actually that's for even bigger time frame, but what I want to see now is I want to see us go from external back to internal. I want to see us go back to external there. So external back to internal, from there go lower, and then from there go even higher. But this is basically how I want to see this week. So from this week, it's gonna take out these lows here, and then from there even higher. So probably the upcoming week will this will be let's actually go from the days here. So what we have here is we take out this low, we accumulate on Monday, we manipulate on Tuesday, maybe even Wednesday, take out the Tuesday's high, and then from Thursday and Friday we go even lower, take out this turtle soup here, and then maybe Friday is already going to continue even higher. So that's basically what I have on on this week. Is I want to see us go even higher, and another scenario could be that we want to go back to external, and we just want to straight run through this low resistance liquidity, just as IST says it, like a hot knife through butter here. So we have all this low resistance liquidity, we go even lower, and then from here this will be Tuesday/Wednesday, and then from there Thursday, Friday, and then this week is already going to begin that bigger time frame market maker buy model. But yeah, 100% my drawn liquidity is going to be turtle soup here, all these equal lows from that low resistance liquidity. This 100% going to be my target, and from here I want to see an instant reaction as a turtle soup, which is going to be the low here. I want to see an instant reaction, and then an instant reaction is going to be on the hourly time frame. I want to see an instant reaction on these lows here, and if we don't get that, then from there I want to see us go lower, take out this low, because we can't always be 100% right, of course. So we gotta make multiple scenarios, of course. So then definitely you want to see this turtle soup. So from there go higher or go lower, and then where lower to? Well, then the first target is going to be this low. Second target is going to be this low, because if we take out this low, I'm not expecting for us to turtle soup inside of constant encroachment and then go higher. That just generates sell side liquidity. Constant encroachment is showing that's still bullish, that's acceptable, but if we go lower than that, that's just equal lows to me. So once we take out this low here, then I expect this low, and then probably even lower, and that's going to be equilibrium of this entire range. So we have swing low to the swing high there, and then the first target is probably going to be take out this low, and then first target is going to be, or the target after that is going to be equilibrium there. But that's for even later. Definitely this week target's going to be sell side liquidity below this low, and if this is going to be, or these equal lows, and if this is going to be a turtle soup, we'll see it then. So equal lows there, sell side there, and then we have buy side above here, so we definitely want to go there, but it's just how are we going to go there and when. It really doesn't matter if you know that we're going to go back there. It matters how we're going to go there and when. So that's what I have on DXY. So basically how it looks is scenario 1 is this is where we opened on Monday. This is where we opened on Monday. We now go lower. I want to see us generate liquidity here. I want to print us higher, see us go higher inside of that SIBI. Then from there, I want to see us accumulate again. And then Tuesday is going to print a high, or this is Tuesday and Wednesday is going to print a high. And then from there, go lower, and then maybe even lower, and that's going to be targeting these lows. So we have this, or we have this, and that's going to be, we go lower, so we open, we go even lower, take out this liquidity instantly, this low resistance liquidity, then go lower, react off those equal lows, so that turtle soup. So react off that equal lows, that's the turtle soup. So let's say that's here, and then from there I want to see us go higher. So we have multiple scenarios, and this is scenario 1, this is scenario 2, and then we have scenario 3 and 4, and that's going to be this, but we go even lower, so we take out this, so we go lower, that's scenario 3, and then scenario 4, that's going to be, we go lower, and then from there we take scenario 4, and this is going to be scenario 4, so we react off that SIBI, and then break off those equal lows, and then go higher. So that's 4 scenarios, and that's like always what you need to have. You need to have those 4 scenarios, always have to have like those 4 scenarios in your head. Like, let's say you only have one, and scenario let's say there were four, but you only have one, and then let's say scenario 3 is happening, but you have no idea because you didn't plan on that to happen. So then you're just gonna be offside the whole week. So you want to have all those scenarios possible. But yeah, definitely I want to see this lower resistance liquidity and this low to get swept. So yeah, that would mean lower prices, and then on bigger time frame it would be higher prices. So let's look at the indices now. So that would also come in line with the indices. Previous week on Friday, everyone was thinking that we wanted to go lower. I also was thinking that we wanted to go lower, but as you can see now, we are showing that we want to go higher. So I'll mark this out here. On the 1 hour we have a SIBI there, we have a SIBI there, and then on the 4 hour we inverse this on NQ. So with an inversion there, you can see it's supporting price there. You see it's supporting price there also at that new day opening gap at constant encroachment. You can see price supporting it there. Now we go higher, but what I want to see on NQ or on the indices would be that this high here, which is just all generated buy side liquidity. So we have buy side there. Just took internal, but we have buy side there. So what I want to see is actually, I want to see this be the high of Monday, Tuesday. And then from here, I want to see us go lower. And then, oops, what I had marked out as well was a singular BISI. So 4 hour, we have a BISI there, BISI there. 8 hour, we have a BISI there, BISI there. So 12 hour singular BISI. So what I want to see is I want to see a direction lower inside of this BISI, and then same as DXY, I want to see us accumulate. I want to see Tuesday print the low, or Wednesday take the low and then take Tuesday's liquidity, and then Thursday, Friday it's going to be higher prices. So that's basically what I want to see. Alright, so the didn't have enough storage, but let's look at ES for this. So NQ I was looking for that what I just explained. And then ES, I want to see this go lower, but you can see we have this divergence here. We have ES making a lower low here, and then NQ making a higher low. So ES is showing that it's weaker here. So we have a singular BISI on NQ, that's that 12 hour, and then we have a singular BISI, which is the 4 hour on ES. So if we look at ES, we have a BISI there, we have a BISI there, and on the 4 hour, you have a singular BISI here. So if you look at this leg here, singular BISI would be here. But yeah, this divergence is showing that's weaker, so we probably won't get the same reaction on ES and then go higher, because ES NQ will definitely tap inside this BISI because it's such a big imbalance and then go higher. So what NQ is going to do is not, or what ES is going to do is not just going to be inside of here and then do the same as NQ. So ES is going to go lower, and then wire lower too. In the previous recording I was looking for where I wanted to go to. I was looking at this rejection block, but that was just too deep in a discount for me. So I was looking at this, I was looking at a volume imbalance here as well, but there was nothing there. So then I looked at this candle and on the 4 hour, and you can see we print devil's mark here. So that's basically a candle where we have, normally you would have a open, would have a low, would have a high, and you would have a close, right? That's a bullish candle, which is going to be looking like this. Oops, let's be even higher, and then we close there. So this is basically bullish candle. There, that's basically bullish candle. Or of course the opposite, which is going to be a open. We print a high, we print a low, and we print a close there. So that's a bearish candle, of course, a big bearish candle. But most of the time we have a power of 3 in a candle of its own. But on this candle, you can see we print a open, we don't print a low, or we print a low, but we don't print a low. Wait, let me explain this here. So the opening is here, candle open, and on the 4 hour candle, when it opened, let's look at the 1 minute. You can see we just straight up pumped to the upside. So there was this news, so we're straight up this pump to the upsides. There was no manipulation there. So what market most of the time wants to do is, I'm expecting for it to go lower on ES because of that divergence. This is too deep in a premium or too deep in a discount. So what I want to see is, I want to see ES actually go to this BISI, but I want to see it go a bit lower for NQ to move inside of that BISI, print Devil's Mark, and then from there go higher. So that would be looking like this on NQ, just the same, as you can see, just the same, but then print Devil's Mark there. So that's what I want to see on the indices. So on the bigger time frame, or not bigger, let's say like end of this week, I want to see us take out this high, and then on DXY, I want to see us go lower. Where lower to? Definitely these equal lows here, and then next target, if we want to go even lower, what I explained, constant encroachment, this low, and then equilibrium from there. Yeah, that's basically my analysis. So yeah, for the indices, I'm expecting for us to take out not ES, because ES is showing, again, because of that divergence is weaker. So I'm not expecting for ES to come all the way to that high. Probably be around this high here. And then I am expecting for NQ to take out the all-time highs here. And then for bigger time frame, like even later, we have a divergence with ES and NQ. And then we have it like that. Like NQ makes the higher high there, and then ES makes the lower high, and then it would be the same on DXY, which would on DXY, again, what I explained was a market maker buy model inside of a market maker buy model. So it's going to be low risk buy around here, and then from there we go even higher. So this would be, or it would be the original consolidation there, This would be the low risk buy, and then from here it would be a market maker buy model. This here, market maker buy model inside of a market maker buy model, and that would be the same on the indices. So let's look here. So then we have a market maker sell model, which is, this is going to be the original consolidation, or this is going to be the original consolidation, and then we go lower, but we print a low there, so we take out those lows, but we don't still have sell side liquidity here. Then go higher, second stage going to be the quickest one, and then we have that divergence there, and then from there even lower, and then it would be a market maker sell model inside of a market maker sell model. So original consolidation, consolidation 1, consolidation 2, smart money reversal, and then on ES it would look even cleaner. So original consolidation, consolidation 1, consolidation 2, and then low risk buy it would look like, and then go even lower. So we don't take out this high here, but on NQ we do. So we have a divergence there, low risk buy, then go even lower, and that would look really beautiful. Of course, that's what I'm expecting for bigger time frame. But of course, if something changes, we gotta adapt with that. So, but that's really what I'm expecting. But yeah, for this week, I want to see this as generate sell side, generate buy side. This as buy side liquidity. I want to see lower prices, and on the end of the week, I want to see us end at all-time highs again, and then here would go lower, Devil's Mark, and then go around here and not take out the all-time highs here. So that's basically what I want to see on the indices. And yeah, that's basically all I think. So yeah, on the funded account, I'm gonna be trading on the funded account, of course. Oh, what am I typing? What is it called? My funded futures. So I am gonna be trading on the funded account, so up 0.4% with that loss, so it's still fine. But this upcoming week is gonna be a beautiful trading week. And yeah, that's basically it. So yeah, I think that's everything. Yeah, it is. So yeah, I will keep it updated on my funded account, and I think this week's just gonna be a beautiful trading week, and I'm hoping to see what we get. So yeah, that's basically it. So yeah.